Alright, so in the last session, we talked about the essential requirements that are needed to give you a strategy that makes money and has a long-term sustainable edge. We also talked briefly about our specific strategy, what it is, what it entails, and basically our method of making money from the markets. Now, those were great concepts, but they were general theory, very important and needed to be understood. But now we want to get to the practical level, right? We want to say, okay, how do you take all of this and use it on a day-to-day basis? What do you do? What are the steps? So to that end, to make it easier for you to be able to actually apply this on a day-to-day basis, we've distilled it all down to basically a 6-step system that you can follow every day that will allow you to take this general strategy, which in our case, like we said last time, is in our day trading, we look to either fade key reference areas on non-trending days or get on board the trend on trending days. That's the biggest level. Like we said, we do some other advanced stuff, which we'll be teaching, but this is the basic core of the strategy. So now what we're going to be teaching is a 6-step system for taking this general strategy and turning it into a specific and practical trade plan each day. A plan specific for each day to allow you to implement the strategy. These 6 steps are basically just things we've learned to do naturally over the years, and we do them really without thinking about them. It's just the way we approach markets. But for the purposes of this training, we've actually taken a look back, broken them down, and simplified them so you'll be able to understand them and use them in your own trading. So, having said that, let's jump right into it with step number 1. Alright, so step number 1 to creating a trade plan for any specific day that you're going to trade is to perform a top-down multiple time frame analysis to determine the market context. Now, we went through extensively how to do this in the earlier foundation training. And again, that's why this stuff is so important. But now that you have that understanding, the first step you need to do each day is to actually start with a top-down analysis to determine what the market environment is so you can put everything into context. Once you have the context, everything else is going to fall in place naturally. Alright? So right now we're just going through the steps, listing them, explaining them. And in the following sessions, we're actually going to be taking a real example and taking each of these steps and actually applying it and show you how it's done in the real world. Alright, but for now, we're going to just go through them and explain what they are. So then the second step is that once you've done your top-down analysis, you understand the context, now you pinpoint and draw in the key reference areas that you feel will likely provide key support or resistance. Okay? So the overall top-down approach is going to give you the context to tell you which key reference areas are the important ones heading into this current day. And then you take those and you actually draw them in on the chart and prepare yourself beforehand for when the market starts trading at those levels. Alright? Now step number 3 is that you need to check the economic calendar and know when the important economic releases are due that day. Okay? This is an important step for a couple of reasons. The first reason is obviously, when there's some major economic release, you don't want to be entering or stuck in a trade as that release hits. Because what will happen is that at that instant, you're usually going to get, highly expanded volatility. And even if you're right on the direction or you have good trade location and so forth, most of the time the volatility will just take you out randomly. So vast majority of times, especially if you're starting out or just developing, you want to know when these releases are to just stay on the sidelines, get out of the way. Alright? But the other important reason to know when the major economic releases are is that it gives you a heads up on the likely general volatility of the day. It basically lets you know what kind of volatility environment to expect, and this is going to be very important, as we'll see, in determining the kind of stops you're going to have, the kind of profit exits you're going to have, and so forth. It really influences a lot, and most traders don't realize how to gauge it or how important it is. But this is a key step, and we'll be getting into a specific example again of how to do this. Now, step number 4 is that you need to know the 10-day ATR or average true range, and also be aware of the general volume environment. Now, here I've specified the 10-day ATR. Realistically speaking, though, you can choose the period. It could be a 20-day ATR, it could be 15, it really doesn't matter. The whole point being that, like we discussed in the foundational training, the average true range tells you what kind of volatility environment you're in, and the volume also is a good indication of what kind of volatility environment you're in. So you need to know before you head into the day this general type of environment, so you can gauge the likely size of the range you're going to have. And this, again, going to really help determine, especially, the size of stops and the profit exits that you're going to use. Now, step number 5 is to identify the pre-market conditions that increase the likelihood of having a trend day. Now, there are several key conditions that give us a higher chance of having a trend day. And we're going to be getting into what those are and what they mean. Understanding these and being able to identify them before the trading day opens is going to give you a massive edge in terms of determining which type of day it'll likely to be that specific day. And as you know, that's going to be huge in implementing the strategy, because the strategy itself that we use looks to determine if we're going to be range bound pretty much, or if we're going to be trending, and then trades according to that basis. All right, so this is a very key step, and it'll fit in, with your top-down contextual approach. It's all part of the puzzle. All right, and then finally, the 6th step is to develop different market scenarios based on if-then analysis. And what this means is that now that you have all this information, you've done your top-down multi-time frame approach, you have the market context, you understand what are the major key reference areas that will likely provide great support or resistance, and you've drawn them in. You know the economic release environment, the general average true range and volume environment, and you're aware of the pre-market conditions that can influence how likely we are to have a trending day or not. Given all of that, what you now do is you develop scenarios like we've discussed extensively in other parts of the training. We never think in absolute terms. We never predict the market outright. What we do is we think in probabilities. And when you think in probabilities, naturally, that means you're thinking scenarios. You're thinking, okay, given this and this and this and this, if this happens, this would mean that, and this is how I would trade it. All right? But if this happens, then it would mean something else is taking place, and this is how I would trade it. You see? So it basically gives you a trade plan in terms of scenarios. And what this does is it gives you real flexibility of mind. It prepares you ahead of time. It forces you to be dynamic and adapt quickly. You're not fixed into one certain way of looking at the market. You're always ready for things to occur that other traders may not even be thinking about, because you've taken the time to do all this analysis and develop different scenarios. And when those scenarios start playing out, you'll notice them quickly and you'll be able to react very quickly. And this is what trading really comes down to in the end, is being able to recognize things and react to them quickly. So these 6 steps, as you see, they're simple, but they're extremely powerful. And doing them in this order, making this a daily routine that you go through every morning for half an hour or so before the market opens, is greatly going to improve your trading. It's going to take that general strategy, make it practical and specific, and then from there we'll go into how to read the market once it's open, the different tactics you're going to use, and then after that the actual execution of specific trade setups, specific entries and exits and all that. Right? But this is the broadest level. Without this, none of that other stuff is going to be structured, organized in your mind. It's just going to happen on a more random basis. This really structures it, systemizes it, and allows you to do it consistently and very effectively. And this is one of the main differences between, the losing traders, the average traders, and the pros, the guys that are doing it for a living. Pros are really systematic in how they look at the markets, and they do a lot of prep work ahead of time. So now we're teaching you how to do that prep work. And in the coming sessions, we're actually going to get into a real life example based on the current markets as of the time of this recording. We're going to be on the right edge of the chart, preparing for a day that hasn't yet occurred, as you would be in your own trading, right? And we're going to take all these concepts and actually put them into place based on that. So now that you have these foundations, the next sessions are going to prove very instructive.